Hi, Todd Pouliot, Gateway Financial. Again, don't forget to click that thumbs up and subscribe. We really appreciate you doing that, and ring the bell for notifications when we bring out new information for you. Today, we got a great flow chart for you. Although I think it looks visually simplistic, trust me, it's not. This is one of the ones that we go through quite often, and it's the employee stock purchase plan. Follow along with me and view our other videos, and we hope you're enjoying learning about our financial services business we have here. And feel free to visit us at mygatewaymoney.com. Employee stock purchase plans can be an important benefit for our clients. These programs can allow a purchase of employer stock at discount, which creates an incentive for employees to increase their ownership stake with their employer. The tax impact upon the sale of shares with an ESPP varies based on how long the shares were held and at what price they were sold. The tax treatment depends on whether a sale is a qualifying disposition or a disqualifying disposition. Say that 5 times fast. These flow charts address the tax consequences our clients will face when participating in their ESPP, and maps the tax calculations upon the sale of employer stock acquired through their plan. I'm going to, as always, share my screen with you so you can see what we're talking about here. And here's the flow chart. Do you sell shares under your ESPP? Yes or no? Obviously, where we're trying to get to is not here. If we did not sell, we don't really have to talk a whole lot about this flow chart. Ultimately, these are the 3 boxes we do want to focus on. The differences are your cost basis will receive a short-term capital gain loss treatment, or the difference between your purchase price and disposition price will receive a long-term capital loss treatment, or you receive a cost basis of long-term capital gains loss treatment. So those are very big, and in our current tax plan that we have, that can mean a tremendous amount of difference based upon where you're at in your tax bracket for your income tax bracket and your short-term and long-term capital gains tax. So did you hold the shares more than 2 years after the options grant date? Yes or no? These are always logic statements, yes or no. If that, then what? The sale is a qualifying disposition. Was the bargain, the discount given by your employer, greater than your profit upon the share of the sales? Yes or no? You will pay ordinary income tax on the amount of shares, full market value, on the disposition date that exceeds the amount you paid for the shares under the option. If not, you will pay ordinary income tax on the full market value on the option grant date exceeds the option price. So understand where those 2 are, and then obviously it'll flow through again. The cost basis on the shares will be adjusted to include the amount taxed as ordinary income. And did your disposition price exceed your cost basis? If no, come here. And again, this is the big difference. Your purchase price and disposition price will receive a long-term capital loss treatment. If yes, your price, you will receive a long-term capital gain treatment. Now, obviously, if we'd taken the other route through here that we did not exercise properly, the sale is a disqualifying disposition. You will pay ordinary income tax in the amount the share's full market value on the option exercise date that exceeds the amount you paid for the share under the option. And did you hold the shares for more than 1 year after the exercise date? If not, the difference between your disposition price and your cost basis will receive a short-term capital gains or loss treatment. And if the answer is yes, it will receive a long-term capital gains or loss treatment. I can tell you so many times we have new clients come to us or prospective clients, and we look at what they've done in the past, and some of their shares sales were sold in the 12th month, not the 13th month. That can mean a tremendous amount of loss just in taxes. So be cognizant of when you're selling these shares, understand the tax treatment. The biggest thing that I see is the amount of money that people lose just in tax. So be cognizant of what you're looking at. Make sure you figure out what the right situation is. And do I hold those shares for an extra 30 days to move from a short-term capital gains rate to a long-term capital gains rate? Again, we much appreciate you showing up to these videos. Absolutely wonderful. And I love this flow chart that we have here. And obviously we update it all the time and every year, but we want to make sure that you folks are tuning in. Click that subscribe button, hit the thumbs up. We appreciate you being out there. And if you have any questions, feel free to visit us at our website, mygatewaymoney.com. And we look forward to bringing the next video to you shortly. Thanks and have a wonderful day.